Hi guys, welcome back to another video on the Q4FY25 updates. In today's video, we are going to be talking about Cellecor gadgets. जिसका result came yesterday, and we'll talk about the business model. We will talk about how the business is changing. We will also do one thing today is I will be opening the financial statements. That is the result document. The balance sheet and cash flows. We will go through every line item and understand the meaning, not just the meaning, but also like to how to look through it, right? That is also something we are going to do, and finally end with the guidance and what you look forward to for in this business, and how does the rest of the year, that is the upcoming year FY26, looks like. Okay, so first of all, let us understand the business model. By the way, if you guys want to understand the model in detail, I would say head over to the business analysis playlist in my YouTube channel, and you'll find it over there. But I will also still explain the business model. It is not that difficult over here. So what does Cellecor Gadgets exactly do? So Cellecor Gadgets is a appliance slash electronics based company. Okay, so they make they make this phones, speakers, Bluetooth headsets, kitchen appliances, home appliances, and they sell it under their name Cellecor. Okay, so these people do not have any manufacturing unit of their own. The most of the manufacturing is done by the third party, or they outsource the manufacturing process. But other than that, if you see the entire product, they make the entire product, and they sell it via distribution, e-commerce, D2C channels, etc. Okay, now if you look at this business, when it came in IPO, I think almost a year and a half ago, right? I think it's been 2 years now. Yeah, I guess it's been 2 years now, since the IPO. Now you will see over here, one thing is the business has changed quite a bit from where it used to be, because when they started off initially, like even before they came to IPO, when they started off initially, it was primarily a mobile based company. Like they would do different types of mobile, especially the product category. Like one thing I would say that differentiates Cellecor compared to other electronics or gadgets company is a price point. They are the cheaper alternatives. Okay, and India based company hai. If you they're not trying to compete with iPhone or Samsung. They're not even trying to compete with like Xiaomi or something. They're trying to provide you whatever Xiaomi, Lava, all of these are, these Chinese players are providing, probably cheaper than that also. So that is where the product category lies. It's trying to provide you the best of the products at a very affordable price point. So when they started the business off, they started being a phone company, right? Especially like below 1,000 rupees SKUs were huge. Like I don't know if you guys have seen that meme, right? Like, this old Nokia phone that is there, right? Like where you can't use the internet, you play that snake game. You can only call and do the SMS over there. So that, what is that? So they used to make those kind of phones and all, like that. Like, those old Nokia phones where there is this meme, like if you break, like if you have an iPhone, right? Like you throw it down once and it breaks, versus Nokia, like you throw it 100 times, it just doesn't break, like the unbreakable phone. So that those are the kind of phones that used to make. So they started off making those kind of phones, and their focus was only in T2 and T3 cities, because let's be honest, right? T1 cities may people obviously want premiumization. People want they want aspirational products. So their focus has never been on T1 cities, but especially in T2 and T3 cities, especially in the regions of the Hindi heartland such as Uttar Pradesh and everything, where you could give them like a big 50-inch LED TV, like good smartphones at a very affordable category. And like I told you, the business has quite changed a lot from the time they've come for IPO. In fact, one thing I really like about business like Cellecor is, whatever they've told, they've really backed it up. Like they were a company that came with a very aggressive guidance telling, they will double the sales, in the coming next 2 years. And they've done that, right? They've done it exceptionally. Whatever the changes they told in the business, they've been able to execute. Once the changes was, like I told, their dependency on mobile phones was a lot, like very extreme. Okay, like I think there was a point where 90% or more than that of the revenue was coming from mobile phones, and they slowly diversified the category. They started getting the contribution from the mobile phones down, and they started getting more and more other products. Okay, so that has happened. Second is geographical distribution has happened. Like I told you earlier, they were there in the Hindi heartland, but now they're trying to target a more of a pan-India presence. They didn't have a lot of presence also earlier, but over the years they've hired Varun Dhawan and Kareena Kapoor as brand ambassadors. Really, it has pushed a lot in terms of marketing. Okay, and the last thing I will tell you is, earlier, like I told you, they were dependent on a distribution model. Okay, now distribution model, like you probably have a store where there are hundreds of brands there and yours is one of the brands, right? You work on that. But now they're there trying to be present everywhere, whether it is D2C, e-commerce, their own khud ka stores bhi have, bhi Cellecor ka, like the standalone stores you have of Cellecor. So they're trying to do all kind of expansion. One is product, there's a product mix happening. There is a geographical distribution happening, and also if you look at it, the distribution also, they're attacking many channels. So that's been what the business has been up to. I will just share my screen over here, because I will just show you the investor PPT and start explaining you, and I think that would make much better sense, right? Like I told you, what they have done. This is the investor PPT, by the way. Just go to screener documents and you'll find it over here, okay? Or you can also go here, you click on this NSE, go to announcement section, you'll find it over there. But anyways, coming back, like I told you, this is the updates of what this year has been, the key highlights. But other than that, like I told you earlier, they were there. Yeah, this is the kind of phone I was talking about, like Nokia ka phone, this phone where you can't do much. So they started off with these phones, then they ventured into smartphone, they ventured into smart gadgets, like Bluetooth headset speakers, then they went into laptops, then TVs, then home appliances such as heaters, geysers, and now they've gone into making refrigerators, washing machines, and ACs. This has been the newest one. They started in H2 of this year. This home and kitchen appliance was started in FY25 itself, in the H2 of FY25. Okay, so this is I think now you guys understand what Cellecor does, right? Similarly, like I told you, again, this is the new category launch they have done in this H2 or in this year they have done, right? Like different product category. AC has been the important thing. Other than that, and all this, the reason also why they wanted to do, they wanted to expand their product category was this earlier mobile phones they were selling. Now, the margins were very low. I think the profit margins also used to come at like 1.9% after everything, right? Because obviously, ना आप अगर 1,000 का फोन बेच रहे हो या 1,000 से भी कम का दाम में बेच रहे हो, imagine आपका distribution cost, आपका manufacturing cost सब काट के आपको कितना ही मिलेगा ultimately. So that is why in order to increase your margin profile, they started going to higher end categories such as this smart TV, fridge, AC, etc. Okay. So yeah, like I told you, also they started going to different states. Earlier they were there only in the center of the Hindi heartland. Now they are trying to spread into pan India presence. They're trying to get, right. I also told you right here, they are having their own stores right now. Can you see Cellecor own stores here? And yeah, they're also there in the D2C channels and everything. Okay? So this is what is going on. They've also partnered with, like I told you, they started manufacturing ACs. Like they've started new product line unka hai, which is ACs, right? For that, they've partnered with the leading companies such as PGL, EPAC, Dixon. I think all of you know these people manufacture ACs. So, these people are working with this. In fact, in H2 itself, after Q3 ka result, I believe, there was an update that came from PGL that, they had gotten an order. They're working with Cellecor Gadgets Limited. There was an update over here, so forth. Okay. And if you look at the sales contribution, as you can see, 55% are appliances, 45% by other product categories. When you talk about other product categories, it is your phone, speakers, smartwatches, all of these things, right? Like I told you earlier, this category was 90%. Now, can you see slowly the dependence on low margin product is coming up and high margin product is going up. Now, think about this. We spoke about in the investment checklist workshop, product mix ke baare mein. When is product mix is a good thing and when is product mix a bad thing? Again, if you guys haven't bought the investment checklist workshop, get it. It's literally the best product out there. I'll put the link in the description box below. Whenever you are switching, let's say from a low value product to a high value product, and because of this, if the margin expansion happens, then it is well and good, right? So over here, can you see they went from selling that under 1,000 ka phone to selling ACs and TVs and everything, right? So the contribution towards that changed or that increased more. So what do you think this is? Let me know in the comment section if it is a good product mix or a bad product mix. Similarly, if you see over here also, offline presence is 91, that is distribution, khud ka stores, this contributes 91%, and online, which is आपका e-commerce, 9% आ रहा है. This also earlier, if you see, 99% was offline, 1% was online. In the first time, I think, not the first, I do not remember when was when inka IPO aaya tha, because the IPO had come. I remember I had made the video after reading the DRHP documents. So at that time, only 1% sale used to come. And now, you can see slowly the shift is happening in the business over here. They're trying to attack all kind of channel categories. Okay. So that's that about the business model. Okay. Now let's come to the second thing. What did we have to expect from the result season this time in Q4? Okay. So in H1, when the H1 of FY25 ended, we knew, or the beginning of the year, that is of FY24-25, when this year had started, we knew one thing. They had done 500 crore of revenue last time, and the target this time was to double the revenue. That is, make it 1,000 crore. Okay. In fact, when they had come to IPO, I think unka revenue tha around 257 crore, and they had planned to double the revenue in FY23-24 to go from 257 to 500. After that, in this year, from 500 to 1,000. So double the sales growth in a span of 2 years. That was the guidance given by the management. And can you see over here? Let's talk about the, yeah. Can you see? Yeah, before I go, can you see the brand ambassadors? They're really working on the marketing also. Varun Dhawan, Kareena Kapoor, Tamanna Bhatt, like everybody over here. But anyways, let's just come to the, where's the result? I think ये ऊपर है. Yeah. Like I told you, right? 500 crore ka tha, and the guidance was to achieve 1,000 crore. So can you see over here? Literally, they have done what they told, right? Like sales double kiya, sales grew or north of 105%. Now, the other thing what we'll have to see is the operating leverage यहाँ पे मिला है कि नहीं. They did miss out little bit, but still, right? आपने sales you grew by 105%, and operating, I mean, आपका profits जो है it grew by 92%. It's not like there is a wide difference over here when you talk about the sales and the profit. It's still there. Overall, it is still a good. The second thing, the third thing that comes over here is you will see that margins that are there. You can see यहाँ पे margin contraction हुआ है, right? Because they went from यहाँ पे almost 17% का margin से यहाँ पे 13.7. Similarly, also profit margin भी अगर आप देखते हो थोड़ा सा point, little few basis points से it's down 3.2 से 3. So why did margin come down? Like one thing we saw in the business model is they literally went from what is that? Catering to low value products to high value products, right? They went from selling under 1,000 ka phone, say TVs, ACs, and everything. So why did the margin? It's recording, right? Yeah. Okay. Cheers. So why did the margin come down in spite of that? The reason is because this year, the entire focus of this year was to not just give the product mix ka change, but also to massive aggressive expansion. Okay. Like be there everywhere, wherever you can find, wherever they can, to make the brand visible, to get that eyeballs over there. So because of this increased distribution, increased presence overall, as a result is why आपका margin का contraction हुआ है यहाँ पे, ठीक है? So it's not because of anything else. Like, and you also saw it. Who are these people hiring? They're hiring Varun Dhawan, Kareena Kapoor as a brand ambassador. So marketing cost has gone up as a result. Second is, like I told you, entering everywhere, every single platform, e-commerce, D2C, everything that is there. So इसके वजह से. And third, like I told you, these people are going into new products, right? Like AC में जा रहे and everything. So that initial setup cost that is there, उसके वजह से भी थोड़ा margins का has been affected. But and this is not a bummer. This is not something like like that. It was. I mean, I did not know how to express it, but you get the point. It was not something like a shock that came, because in the beginning of the year in FY24-25 they had mentioned this in the PPT itself. Like this year in 24-25 we are targeting 1,000 crore in revenue. We are going to be doing aggressive expansion. As a result, you probably will witness a little bit of margin contraction. So overall, when you look at the result at a glance, it has been fantastic. The guidance has been achieved. Everything is done up to the mark. There is literally no problem. Now we will go to the second part, which is the financial statement analysis. Okay. Yeah, na? Okay. So if you look at the result document over here, I'm going to be looking at only the year end, because that would give you an entire picture or a whole picture. So what and all do you look? One, you look for sales growth. You see that sales growth has grown by 105%. Great. Other income dekh lo. Other income is hardly anything, because aapka 1,000 crore ka sale hai. 1,000 crore ka sale mein only 3 crore is coming from other income. So it's not a big deal. Also at the same time, we do not see a huge or a massive increase in other income either. In fact, if you see, other income has decreased. Okay. Sorry, it is not 3 crore, but it's 3 lakhs. It's 3 lakhs because no. Yeah. It's 3 lakhs, because this is in lakhs, not in crore. Sorry. Anyways, so one, income has sales has risen, you'll also see there is not much contribution from other income. Okay, do we see any exceptional items over here? There is no exceptional items, right? And then we come back to over here profits. We see that the profit also has grown by around 90 percentage, right? Net profit for the year. Okay, so overall there is no problem in terms of income statement. Income statement is top notch. Along with that, you also see EPS also has grown at the same rate. 80% se grow hua hai at the same rate as profit. So overall, when you look at income statement at a glance, there is no problem. Okay, then we will come over here to the second part, which is the balance sheet. ठीक है, बैलेंस शीट में हम लोग क्या देखते हैं? पहला चीज हम देखते हैं is, we look at the equity, right? What is the equity base looking like? We see that the equity base has increased by 70%. Now, why is equity base important? Think about it. You need to be shuffling the money back to the business. It also shows, you're being efficient over here, right? So that is one thing. So equity base is grown by 70%. Then comes your other few things, that is asset and liability. Now, few things, you will see there are two things: non-current liability, current liability, non-current asset, and current asset. To people who don't know, I'll go very slow over here. So if you guys already know what this is, then you can skip it. But there is a little bit of nuance over here that I will try to explain later. So what is the difference between non-current and current? The meaning is same. Whether it is asset or liability, the meaning is same. But what is the difference between non-current and current? Let's say, for example, if there is anything, let's say if I'm investing in a mutual fund, okay, and the duration of that mutual fund is more than 12 months, okay, then it comes under the non-current. If it is lesser than 12 months, then it comes in current. Any kind of investment that you're doing, as let's say if I am investing something, if it is an asset, right, then if let's say the investment duration is more than 12 months, it goes into non-current. Less than 12 months, it comes into current. So I hope this is clear. Okay, now think about it over here. We look for this ratio called as current ratio, which is also called as a ratio that talks about asset liability mismatch. Now, what is this asset liability mismatch over here? Okay, let's say, for example, now this company Cellecor Gadgets, it goes bust. Okay, like let's say something happens and it just goes bust, everything goes under the water, right? We check this ALM so that, let's say tomorrow anything happens, let's say there is a little bit of also tension in the business, then the company must have enough money. Okay, they must have enough money to pay off whatever the current liabilities that are there. Now, what I mean by current liabilities or short-term borrowings, it means any loans, any kind of loans, any kind of payment that you have to do to anybody, which was supposed to be done under 12 months. The company should have enough money, or we call it also as liquidity ratio. It should have enough money, to get, to pay all of these things off. Okay, so over here, if you see, we see that the current asset kitna hai yahan pe? It's 315 crore. Okay, it's in lakhs, divided by 100, you'll get crore. 17198 is the current liability. Okay, so yahan pe this divided by this, current asset divided by current liability gives you the current ratio, which comes up to be 1.76. Now, usually anything greater than 1.5 or anything 1.5 to 2 or anything greater than 2 is considered well, because it just shows you like the company has enough money to get rid of, to pay off its short-term loans. Okay, now why only short-term loans, you can ask me, why is it only short-term loans, that we are more concerned about, getting rid of? Because when you talk about short-term loans, that is current liability, there are few things. Okay, one is one is like, your payables that are there, right? Like basically, let's say if Cellecor Gadgets is there, what is their payable? Let's say they've bought that semiconductor, they've bought some silicone, they bought some TV ka, that LED ka screen and everything, they buy it. Okay, so they have to, here payable is who for Cellecor Gadgets? Let's say Cellecor Gadget is getting the AC manufactured. Okay, so they're getting the AC manufactured from PGL. Let's say PGL has manufactured the AC and given them, they have to make the payment over there, not to PGL, right? Otherwise, do you really think PGL will give them the AC? वो बोलेगा like, भाई तू, if they are telling मैं 12 महीने के बाद आपको आपका AC का वो जो आपने मुझे दिया है उसका पेमेंट मैं कर दूंगा, PGL तो झूठा उठा के मारेगा उसको, मतलब, and they wouldn't do business with them. So obviously over here, this is the reason, like since you have a lot of these payables, you have this micro vendors and all of this, right? As a result, getting rid of them is more important. Otherwise, tomorrow they wouldn't want to do business with you, like if you're not going to pay them on time, right? So that is the thing. Now think about this. This is asset liability mismatch that we call, and there is no asset liability mismatch. Now, there is a deeper way to look at it over here, which is called as quick ratio. Okay. Now, think about this. I have taken all this loan and everything, right? I'm Cellecor Gadgets. I've taken loan, and let's say I have to get rid of the loan tomorrow. Something comes up. Something comes up. My company goes bust. I need to have cash, right? And where can I use the cash from? Current asset, right? So I have enough money. Like, let's say if I can't use the money that is there in my plant properties, right? Let's say I can't sell that and do, at that time, whatever money I have, I need that money to get rid of the loan. Now I can't, let's say I have to give the money to PGL or anybody. So over here, can you see in this current asset there is one important element called as inventories. Okay. Now I can't tell PGL ki, like, PGL has given me the AC and I have to give them the money back. Now I can't tell ki, like, bhai tu mera inventories jo hai usko le lo or usse payment. Let's say I have to pay PGL 2 crores, and let's say I have some AC of lying of 3 crore rupees, and I tell him tum 2 crore ke bana, instead of 2 crore you take 2.5 crores of AC and you take and go and uska hisab barabar karo. You think really that will happen? We are not running a barter system over here. Or let's say if you're running a steel company over here, let's say you have to pay off somebody. Tomorrow will you tell, अरे मेरे पास यहाँ पे steel है तुम वो लेके जाओ वहाँ पे मेरा loan खत्म हो गया? You can't, right? Because inventory is something you have to sell to your customer, get that money, take that money and give it to your supplier. That is how it works, right? So inventory is a part of asset, but inventory is not cash. You can't pay off your loan with your inventories. Unless and until you sell your inventories, you can't pay off the loan. Understand, right? So that is why we need to minus this inventory from this current asset, because inventories is not cash unless that inventory is sold, right? So whatever the current asset is there, you minus the inventory. So 315 crores minus 209, okay, divided by the current liability. This is there. This entire formula, we call it as quick ratio. Okay, current asset minus inventory divided by current liabilities. Generally we usually want this ratio to be greater than 1. Abhi yahan pe, if you look at this quick ratio is coming to be 0.5. So whenever you read in CFA or any of your books, we've been told that if the quick ratio is less than 1, right, it is a bad company. We just make this generalized statement. Now this is where the difference comes between reading books and being able to apply it in real life. Okay, this is the huge difference, and this is where a lot of failure happens, because we think, what is that? Quick ratio is less than 1. It's 0.5. It's literally half. Like, it's a bad company. But we need to, this is where the nuance of the business model, this is why I keep telling you all, if you don't read the business model, if you don't read the con call, you will never understand financial statements. You won't, right? You will misunderstand the financial statement over here. Now, can you see, yahan pe inventory kyun bada? Last time to 92 crores, abhi 209 crores. Think about it. What did I tell? This time in H2 of this year, they started going into, making ACs, making coolers, making refrigerators. When do we see the highest sale of ACs, coolers, refrigerators? Which season? April, May, June, because April, May, June is your summer season, right? So agar aapko April, May, June mein bechna padega, you have to get it manufactured in September, October, December. You have to keep the stock in January, February and March in order to be able to sell it in April, right? You can't be like, April 1 ko summer start ho rahe, March mein main jaake PGL ko order dunga mera AC banane ke liye. It doesn't happen that way. You have to give order 6 months before at least, and 3 months before you should have it in your stock in order to be able to supply to your suppliers, right? Your distributions people, whoever you want to supply, you have to have. Now, because of this, because you're approaching a summer season and it is a peak season, right? That is why you see this inventory has risen. As a result, why quick ratio is 0.5 and not greater than 1. So it would be wrong if you tell ki, like, if you just look at the financial statement and like, ye galat hai. When it would be a problem? Let's say this inventory is that now they've kept, they have stocked it up, right? Like they kept the AC and everything. Aage jaake, H1 of FY26, if we see this inventories are not being able to convert it into sales, then it becomes a problem. Not now. Understand the difference over here. I'm not telling ki, like, 0.5 hai, fir bhi theek hai, sab changa chal rahe. No. Understand the nuance over here. If they're not able to do it, and how do you know they'll not be able to do it? Kal jaake pace of growth, sales growth will come down, right? And that is why I connect everything to sales growth, because you don't even have to check inventories. Kal jaake like sales growth kam hua, kahan pe problem aa gaya, right? Now you understand why that one entire thing, sales growth kyun kam hua. When you question that entire thing, you get all of your answers over here. So now you understand, right? Like iska Balance sheet mein, there is no problem. Balance sheet, everything is right. Okay. Next, let's come to cash flows over here. We will see the profits. Profit is great, 92% se hua. Right now, working capital ke baad, you see the net cash flow that is there. Last time it was in the negative 101 crores. This time it is minus 33 crores. You can see one thing is it is improving, right? Cash flows has turned is still negative, but it is improving. Again, why did the cash flow turn negative? Come back over here. Increase in inventories, right? How much did the inventories increase? Last time it was hardly 40 crore tha. इस बार कितना है inventories में? 117 crore. Again, why did the inventories rise so much? Comes back to the same point. AC. And this is something you will see across everybody. PGL, Amber, Dixon, what is that? EPAC, और एक है Virtuoso Opto Electronics, Aditya Vision Limited, और एक कंपनी है EMS बोल के एक कंपनी है, EMI Electromart India, something, there is one, I'm forgetting the name. All these companies you will see same to same problem, because Q1 ka month for them is bumper month. They will make, I think, 35 to 40% of the sale of the entire year will be done in Q1 ka month alone. Okay, so Q1 ka quarter alone. So that is why, as a result, you see net cash flow. Now over here also, one thing again, you need to understand cash flows being a positive is not a good sign alone. You need to, there are multiple case scenario. When is cash flow being positive a good sign? When is cash flow being positive is a bad sign? Similarly, when is a cash flow being negative a good sign, and when it is a positive, right? If I, as a business, my cash flow is negative because I'm putting it in working capital, I have a big season coming up, it is okay. Like over here, cash flows is turning negative क्योंकि यहाँ पे inventories बढ़ रहा है, you're increasing the sale by 100%. Obviously, थोड़ा receivables में you will have problems and everything. As a result, my cash flow is negative, right? Not the other way around, right? It would be negative when I'm not able to do the sales, right? I'm not able to convert these things into sale, get the number. That time it would be bad. So this is the problem. Again, there is no problem with cash flow also. All in all, well and good. Okay. Now the other thing. So we spoke about the entire FY25 year. They executed the guidance, what was told. Balance sheet is good. Cash flows is great, everything. Now let's talk about what does FY26 look like, right? Because market aage ka dekhta hai. Now when you look at FY26, they've given the guidance. I don't know where it is. Unnecessary all these documents they give. I just don't understand. Kahan hai bhai? Ha. So yeah. Now, can you see over here? They're telling ki like our goal is to continue this momentum with an additional 500 crore plus in FY26, helping us reach 1500 crore plus in FY26. So what is the guidance for the upcoming year? 1500 crore. इस साल कितना किया? 1000 crore. 1000 से 1500. कितना हुआ growth rate? 50%. Earlier 256 से 500 कितना था? 100% sales growth. 500 से 100 sorry 500 से 1000 कितना था sales growth? 100%. 2 years they grew 100. Now can you see, now they're telling like हम लोग 50% से grow करेंगे. So what is the one thing you can infer from here? The car which was going at 100 km per hour now is going at 50 km per hour. What do you see? The pace of growth is coming down. Now you can tell me like yeah Prerna, but the pace of the business is growing up, right? Like I mean अभी भी सिर्फ छोटा ही company है, सिर्फ 1000 crore का market cap है. Yes, you are right in that way also. Yes, the base is growing. As a result, the pace of growth is coming down. I understand that, but still यहाँ पे you cannot ignore the fact कि like pace of growth यहाँ पे थोड़ा घट रहा है. Why am I telling this? I'll tell you one thing, because they're targeting 1500 crores in sale and 50 crore in PAT. इसका market cap कितना है? Around 1167 crore. Okay, so 1167 divided by 50. Almost 23. So iska 1 year forward P आ रहा है कितना? 23 to 25. 50% का growth engine available at 23 to 25 P. That's roughly around, that's like a high growth engine, low P. Okay. Still P rating is possible. But having said that over here, just rate से यहाँ पे पैसा बना था, that will get slowed down. The other thing you have to understand over here, Cellecor in the last year, I think it was like, I don't remember what was the 1 year forward P when you looked at from FY24's perspective, 1 year forward P of FY25. What I'm trying to tell is 100% growth engine available at 40 to 50 P is greater or better than let's say 50% ka growth engine available at 21 to 25p. Like, I hope you are able to infer this, what I'm trying to tell. And see, this is also one of the reason why I don't like to talk about valuation, is because I again, this is no buy or sell recommendation, by the way. And the second thing over here is, valuation is a very subjective thing, right? What I might find expensive, you might find cheap, and vice versa, right? Like, it works both ways. So it take it with a pinch of salt at the end of the day, right? So over here, one, pace of growth is coming down. And for me personally, like, pace of growth coming down. And another thing over here is, although it is still, because it's still a small cap, man. I mean, it's still 1000 crore ka hi, 1200 crore ka hi market cap. It still has a long way to go, but we can't deny the fact, abhi iska pace of growth is coming down. Okay, so that's that about this entire company. Oh, and the other thing is, these people are raising 100 crore. Okay, they're raising 100 crore. Uska QIP kar raha hai, because why yeah, because QIP kar raha hai. Yeah, like, they need working capital ka requirement. Okay, so with all these new products that are coming in line, they need that working capital ka requirement. So obviously, because of that, the other thing over here, coming back to the guidance, sales will be growing by 50%. And I don't think they will have that much of a operating leverage, because this time the 30 crores are, right? 30 say 50 crore ho raha hai. So that's how much is that? 70 to 80 percentage ka. Oh no, they will have operating leverage. Sorry, my bad. Because, oh yeah, they will have operating leverage. They also mentioned in their that guidance ka, that deck, where they told, in FY 24-25 we sacrificed margins, right, in order to achieve growth. But this time, since you're going into newer products and everything, the margins are going to come back up. So probably again 50% co growth engine. If you still get like 60 to 80% like operating leverage, I think P rating is possible even now. But again, you can't. I mean, anything can happen over here. Okay. The last and the final thing I want to close up is on the rumors and the speculation that is there around, because I think you all have noticed with this talk that is there. There has been a huge volatility, especially in the last 2 days or last 3-4 days. There has been a lot of volatility, right? And to be honest, I have no information than what you guys have. I have the same information, what I read on Twitter and what I read on the news and everything. It is still the same. Basically, unka, if they have a shareholder, somebody called as Tibernewala. Let me just, yeah. If you go to the shareholding pattern, you will see there is this Tano Investment Opportunities Fund bolke ek hai, that holds around 13% ka, what do you call that? 13% ka holding in Cellecor Gadgets, and they had invested over here, I believe, pre-IPO ka time. Okay. Apparently, there is this guy called as Harish Tibernewala, who is who resides in Dubai, and he has multiple companies, and he's an FPI, and he makes investment through various foreign companies that are there, in various Indian businesses in the stock market. Okay. And the ED that is there has raided his properties, his home, seized his equities and everything, his assets, including equities. And there has been cases about pump and dump and all of these things. And apparently, one of his holding is also Cellecor, through, like I told you, Tano is one of his companies. Similarly, I don't know if you all guys remember, with JTL had raised money in QIP, and one of the companies they raised money was Zenith Multi Trading, which also belongs to the same person, right? So because of this, there was all this rumors, again, I do not know if it is true or if it is false, because in March, one circular had come by the management telling, they're not involved in any of these activities. So we, again, like I told you, I do not know anything about this. I'm just stating the information here, because I know if I don't talk about this, people will be like, oh, why didn't you highlight this, and blah 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 blah, all of that thing. So here's the thing, I do not know anything about this. Like, I don't want to, I mean, there is no confirmed news. It's a lot of speculations. Nobody knows what the truth is other than the management itself, right? Like, and we sitting like a retail investor from outside, there is nothing we can do. I mean, we can only take a decision based on the document. For some people, this could be an error, but for some people, it might look like an opportunity. So to each their own. That's how I would, I would say that. But yeah, again, like I told you, I do not want to have an opinion on these things, because I I do not know what the truth is. I'm not really sure. So I don't want to have a strong opinion on something where I neither have an experience in this thing. Like, I've not been there and I haven't seen, nor do I know who these people are. Right. So I would rather like be like, oh, it's not my cup of tea. I would rather be honest and be like, I don't know, So yeah, that's that with Cellecor Gadgets. Overall, good result. Great. Yeah, overall good results, great. There is nothing to complain about, I would say. Fantastic set of numbers. I think this time, this year, in H1 and H2, the operating leverage that we missed, we should be able to see that in the upcoming year, and that should at least fuel the business for a for a period of time. So that's that, guys. I hope you'll enjoy the video. And again, just a small reminder that if you want to understand about cash flows, balance sheet, and everything, how do you look at it? What are the different cases? What are the different scenarios? Get the investment checklist workshop. I'm going to put the link in the description box below, and you will not regret buying that. Anyways, take care. Bye.